to you the morning buzz on Dalal Street, and we have lots to cover over the next half an hour. The December quarter results of HDFC Bank will come out today post market hours. We'll get you the street's pulse on that. Also, the first listing of 2024, Jyoti CNC, will debut on bourses NSE and BSE today. And we'll also be joined by Mr. Brijesh Ayal of IDBI Capital Markets and Mr. Sudeep Bandopadhyay of IndiTrade Capital as well. But before we get into the thick of things, let's look at the global setup this morning. Not much to take as far as global markets are concerned, Amit, isn't it?
Mixed and mostly moderate. Dow Jones closed in the negative marginally at minus 0.31%. S&P was in the positive at 0.08%. Nasdaq 0.02% in the positive. Dollar climbed towards its highest since December as US yields have risen. Coming to the European markets, back in the red at minus 0.54%. Hang Seng has had a big dip in the Asian. When we come to the Asian markets, it's at this morning it's at minus 1.91% and falling. And Nikkei 2 today is in the negative after being in the positive for quite some time, at minus 0.66%. So moderate mostly, and today, as we know, the US markets will be closed.
All right, and as US markets are closed on, US markets were closed last night on account of a holiday over there, Martin Luther King Jr. Day, because of which the US markets were closed. So not much to take away from the global context as the mother markets are closed, and Indian markets as a result have opened little unchanged. But the first tick for Nifty has come in fact above the 22,000 mark, and in the morning trade we are trading flattish. Nifty is down somewhere around 0.15% at 22,063 mark, so pretty much at the day's low, whereas Sensex is trading with a cut of 0.11% this morning at 73,248 mark. The mid cap and the small cap indices, they are showing signs of resilience in a market in a market that's largely volatile. And the mid-cap 100 index has in fact made a new lifetime high, and the index is slowly inching towards that 48,000 mark. Now, we have never seen 48,000 mark on the index, so keep an eye out for that. We are just about 7 points shy of it, and the small cap index is also moving higher. Currently, it sits at around 15,650 mark. Volatility continues to be a problem, and that's a thing with a market that is rising. We are at an all-time high level, so we can expect some bit of a volatility to persist in the market. And India VIX currently is up about 1% or so, and it's sitting at 13.92 levels. But with that, let's also bring on board Mr. Brijesh Ayal of IDBI Capital Markets. Thank you for joining us, Brijesh. Nifty has rallied by somewhere around 450 points in the last two sessions, and index heavyweights such as your Reliance, TCS, Infosys, to name a few, have participated in this run-up. But some of the technical indicators such as RSI, the Relative Strength Index, are suggesting that we are now in an overbought zone. So what's your sense of things? Will we see a 100 move down before we move 100 points up?
Yeah, morning, Suresh. So as you said, definitely because of this particular gains, the index is in the overbought zone. So the view for the Nifty was like we were expecting 22,200 to be the maximum upside, and somewhere close to 22,200. I was thinking there can be a possibility of profit booking. But now today, the way the market has opened, and if I look at the intraday charts and all that, I have a slightly cautious view. I would be exiting my longs, whatever the trading loss. If today's low is broken, like what first 15-20 minutes the low, then Nifty made a low of close to 22,040 level. Yeah, exactly, 22,041. So my view is, if those levels are broken, it's purely from the intraday point of view. If that is broken, then I sense another 100, 150 points kind of a profit booking in the Nifty. So slightly cautious on the immediate basis. 22,200 is likely to act as a resistance. Low directionally, the view is positive. There is no change in bullish sentiment, but then within the bullish sentiment, I think some profit bookings might come. And Bank Nifty is something which is not performing as of now. Bank Nifty is above 48,000, but then that momentum is not catching up. Maybe once that HDFC Bank results are out and once there is a more clarity on the banking stocks, I think that momentum will pick up. But then at this moment, I think I would be slight cautious on the market from the profit booking point of view. Maybe 100, 150 points can be the decline in Nifty in case if the today's low is broken.
Yeah, Brijesh, actually I wanted to touch on Bank Nifty, especially because, at least in the last 2-3 interactions, we have been talking about how the banking index has finally taken over 48,000. But, time and again, we see a big correction, somewhere around 800 to 1,000 points. Anything that suggests that we are done with 48,000, at least for now, and we can move higher from here on?
I think we need 1 or 2 days more of a confirmation, because right now again at 48,200 and 48,500 there's a lot of a call writers. Though there is a selling pressure in the Bank Nifty as of now. That writer has to, like, that unwinding has to be seen in the market. So as long as that unwinding doesn't get into action, specifically 48,500. So I don't think there will be aggressive move. We might even yesterday the close for the Bank Nifty was quite good. I believe today there can be momentum. Maybe I may be wrong also. Maybe in the next closing hour, when we approach that HDFC Bank results, so I think that momentum can come. So that action will be seen in the Bank Nifty. I need a Bank Nifty to close above 48,200. If that close comes by today end of the day, then I think the positive momentum will continue, or else it may again come back below 48,000.
Good morning, Brijesh. I'd like to drive your attention to a company that's the 9th largest PSU, the 41st biggest company of India, 1.75 lakh crores, but a company that's not mostly talked about in these investor parlances. Indian Railways Financial Corporation, the stock has touched an all-time high of around 140 from the IPO price of 26 rupees, almost a 411% jump. Last 1 year, it has jumped 323%. What do you make of the stock? Is the rally going to continue, or is it time to cash out?
Specifically for the railway stocks, we are saying that it's not that expensive still the way other defensive stocks are. So railway stocks are not expensive as of now. If particularly IRFC, it has gained almost 30%, and last month it's already up by 60% in the last 2 months. So because of this, technically again the charts are in the overbought zone and everything is there. Directional view is still, we believe it can be further gains can be seen in the IRFC, but then we need to take some profits. So I believe at this point at 140 levels, I would book few of my profits. I would wait for some reasonable correction, and I will re-enter my long positions. Directionally, the view will be positive, even from the technical perspective and from the fundamental perspective, because we don't believe it's still an expensive one. So corrections will view as a buying opportunity. Maybe not the entire profit booking, part profit booking in this particular stock is advised at the current level.
All right, that's the view as far as IRFC is concerned. But Brijesh, also wanted to pick your brains on a company that came out with its results. Now, Jio Financial Services declared its Q3 results yesterday after the market hours. I believe the results, as far as we know, they are largely a non-event, as the company has not really begun its operations yet. But for the benefits of the viewer, let's just play up the numbers. Total income declined by about 31% on a quarter-on-quarter basis. Net profit was down 55%. But then again, the numbers are largely, from the interest income component, and some bit of a decline we are seeing on a quarter-on-quarter basis, because the company had received a big dividend payout of about over 216 crores or something in the previous quarter. But as I said, the numbers are largely a non-event, since the operations for the company are yet to begin. But Brijesh, coming to you, this morning the stock is down somewhere around 4%. What is leading to this price pressure for the stock, and what are you making of the movement in 2024 overall? It has been a large outperformer. It's up somewhere around 10% or so against a 1.5 to 2% movement in Nifty.
So, Shivans, as you said, the income is more of a interest and the dividend thing which we are declaring, and they are getting the numbers. And I think now for the very first time, they are given the roadmap for the next 12-month structure. So maybe post 12 months, I think we'll see exactly what Geo Finance is doing. So I think it's a wait and watch for another at least a year period of time. If I do look from the technical perspective, I think there was a momentum which started from the level of 230, it almost went up to 270, and then post result results, the stock is correcting. This can come back to 240, 235 level is what I said from the charts point of view. It's a very limited chart. So eventually anybody who is holding the long position should hold with the stop loss of 230 levels. And I'm not very confident whether I would be buying back when it comes to 240, 235. I would wait and watch at that point of scenario. Looking into overall market scenario, if the market, if there is a correction in the market, then I might not buy this stock. So specifically from the long-term perspective, at least another 2 to 3 quarters, I will keep it. I will have a wait and watch kind of strategy for the Geo Finance.
Okay, Brijesh, wait and watch for Geo according to you. But what do you recommend for our investors today?
I think yesterday, like in the last week, the pharma was the one counter which was corrected and it has come to the support level. So I believe there are two stocks. One is the granules, which is in the uptrend. I believe it can, this continuation of the uptrend can be seen in the granules. I would like to take the buy idea at the current price with a stop loss 400, close to 400, 410 level, with a target of 468. One more is the Zydes level. Again, this again from the same pharma space. I would like to go along at the current price with a stop loss of 704, the target of 758. So very specific, very limited stock for the next 1 or 2 session.
All right, those are the picks from Brijesh. Sir, thank you for joining us here on News 9. Appreciate your thoughts, appreciate your time, and see you soon again. But with that, let's take a short break. On the other side, we'll discuss the expectations as far as HDFC Bank's December quarter earnings go, and we'll also be joined by Mr. Sudeep Bandopadhyay. So stay tuned with us.
Pakistani spy agency ISI's sinister plan to target India. Training women to honey trap top civil and military officials. Counter honey trapping ops initiated by India. But gullible victims still caught in the web. Top military intelligence experts break down the web of deception. Colonel Hani Bakshi explains the phenomena of honey trap.
जहाँ पे भी आपको लगेगा, उनको लगेगा कि there is a person who is susceptible to women, who's making a lot of women friends on the social media. That is where they will make a spoof account and then start luring the person.
Colonel Pavitran Rajan decodes the psyche of the victim and the predator.
But when you go up the chain, no one enforces it to people at the top. That disciplinary regime and the security regime is not enforced at the top. And they usually have a public profile where it is much more easier to approach that person.
A News 9 special on how modern technology has added teeth to the ancient spying tactic.
Our story takes you inside Pakistan's honey trap machine.
This and more, streaming on world's first news OTT, News 9 Plus. Download now.
Currently, the industry is facing a lot of challenges as far as demand is concerned. Basically, the US markets has slowed down because of high inflation.
So obviously, diamonds being a dream product, something which doesn't have a utility value or is seen as a luxury. So that obviously goes off your shopping list. That's the first item that will go off your shopping list, especially in recessionary trends.
The lab-grown diamonds are not mined and they do away with the entire mining. So they save up on all the environmental damage that is associated with mining, and of course, the mining cost, which is why they're even more affordable.
People that is impacted by all these recessions are the artisans, are the people who work in this industry, right? But I think lab-grown diamond has allowed them to actually use their skills in the same product.
This and more streaming on world's first news OTT, News 9 Plus. Download now.
Welcome back. You're watching First Stick here on News 9, and Indian markets, now they have recouped some of their early losses, but we are seeing some bit of a resistance play out around that 22,100 mark. And as of 10 a.m. this morning, Nifty is down somewhere around 0.1% at 22,075 levels. The Sensex is also trading with a cut of 0.07%. And it's currently sits at 73,273 levels. The mid cap and the small cap index, now the mid cap index has claimed that 48,000 levels for the very first time, so that's a new all-time high for the index. The new all-time high sits at around 48,053 mark. We are just about 40 points shy of it. The small cap index is also building onto the morning momentum, and that sits at around 15,642 mark, just about 30-40 points shy of its record high. And volatility continues to pick up. India VIX as of 10 a.m. this morning was up about 1% or so, just over 1% at 13.93 levels. But the major driver for the markets will be the December quarter earnings for HDFC Bank. What are the key expectations, Amit?
So yes, most brokerage firms and analysts are expecting healthy numbers, though net interest margins will be under some pressure due to high cost of funds, and the net interest margins may remain stable QOQ, quarter on quarter, at around 3.4% to 3.6%. Earlier this month, HDFC had announced their gross aggregate advances at 24 lakh 69,500 crores as of December 31st, 2023, registering a growth of as much as 62.4% year on year. Domestic retail loans jumped as much as 111% year on year and 3% quarter on quarter. Commercial and rural banking loans grew 6.5%. Corporate loans grew 2%. Going forward, analysts expect the bank to have healthy liquidity coverage due to the merger effect. So year on year right now we cannot really calculate, but due to the merger effect, the numbers would be healthy going forward, with return ratios being aided by robust growth visibility in the year to come.
All right, and as you rightly pointed out, the numbers on a year on year basis are not comparable, because that are just of HDFC Bank alone, whereas on a quarter on quarter basis they are comparable, because they'll include of both HDFC Bank and HDFC. The merger took place back in July 2023. But on the whole, HDFC Bank has a weightage of about 13% on Nifty. So the stock and pretty much banking stocks in general will decide the course of trade in the second half of this session, as the numbers come out only after the market hours. But in the October to December quarter, the Q3, HDFC Bank surged somewhere around 12%, outperforming Bank Nifty that surged about 4% or so. But if you look at the year to day 1 year returns, the stock has largely underperformed the banking index. It's somewhere up around 4%, whereas the banking index, which remember has been a laggard among the other sectors, that is up somewhere around 7%. So HDFC Bank has been a relative laggard in a sector that is already underperforming. But to discuss that and more, let's bring on Mr. Sudeep Bandyopadhyay, Group Chairman at IndiTrade Capital. Sir, thank you for joining us here on News 9. Always a pleasure speaking to you. Now, HDFC Bank, we were just discussing what are the street's expectations, but for you, what are the key variables that you will be keeping an eye out for?
You're talking about HDFC Bank specifically?
Yes.
As far as HDFC Bank is concerned, net interest margin is going to be extremely important to my mind, that we know HDFC Bank is under compulsion to raise a lot of deposits, and that's the reason why I think the cost of deposit has been going up. And how they maintain the net interest margin and how they increase the net interest margin will be something to watch out for. Of course, the credit growth related commentary of the management post the results will be also of interest because there is on one hand they have a deposit mobilization target to meet multiple regulatory requirements and also the loan growth. So we'll have to see how they're balancing that.
Good morning, Mr. Bandyopadhyay. As I see, the stock is down today in the negative at around 0.26%. Now, going by the numbers, apart from net interest margins, what they announced in December, for December 31st, whether it is domestic loans or it is gross aggregate advances or it is commercial and rural loans, all have jumped by big margins. Do you see that as an indicator of a positive outcome in the stock to be performing better than it has performed in the last 1 year?
Well, I have no doubts in my mind that eventually HDFC Bank will definitely perform better than what it has performed in the recent past. The bank has a tremendous potential. I think these temporary challenges which they had post the HDFC Limited merger, the challenge was they had to mobilize huge amount of deposit and also keep the costs down. And that deposit mobilization was required for two purposes. One, as I was saying, for meeting the CRR, SLR kind of a requirements. And the other was, of course, to support the loan growth. See, end of the day, the loan growth and deposit growth has to go hand in hand. You can have a mismatch for a short period of time and you can bridge that with some other kind of borrowings. But eventually, in the long run, your deposit growth and loan growth rates have to be similar, at least very close. So I think that is what the challenge is. And if they have been able to grow the deposits very well, I'm pretty confident the loan growth also will have been there.
Right, as we speak, the Jyoti CNC Automation, which is the first listing of 2024, that has made a debut on the bourses. The stock has listed at a premium of about 11% at rupees 370 rupees a share compared to the issue price of about 331. But Mr. Bandyopadhyay, coming back to the company overall, at least what we are hearing from the experts, it looks well positioned. But there are some financial hiccups for it. It has a negative return on equity. The PE, at least at IPO valuation, is relatively high. It is at about 324 times compared to the industry average of about 50. What's your view on this stock? Is it one that investors should hold for long-term gains?
Well, we did skip and we recommended skip as far as this issue is concerned. And, you hit the nail on the head. The valuation at which it was being sold, I think, was little out of line. And that's the reason I believe that it's better to avoid. Yeah, long term, everything can be good, Shreyas. Well, it's a very good thing to say that in the long term it may be good. Of course, it can be good. But I think, we have to live and progress in the short term as well.
All right, so perhaps wait for some bit of a correction to take place before making a fresh entry into that position, because I want to understand from a fundamental standpoint, how do you view Jyoti CNC as a company?
The business, there's no problem in the business. I think the business is good. The valuation is what was a bit of a challenge. So maybe the time correction will lead to a better valuation and entry point. Maybe price correction straight away will offer that. So let's see.
All right.
Mr. Bandyopadhyay, earlier in the show we had spoken about a PSU stock that had hit an all-time high in IRFC, Indian Railways Finance Corporations. Now I was looking at PSU stocks as such. Most of them have given huge returns in the last 1 year. I'll name two that are not even priced very high. One is NTPC, that is at 315%, has given 89, almost 90% returns in the last 1 year. ONGC has given 61% returns over the last 1 year, and IRFC itself almost 325% returns in the last 1 year at 140 rupees right now. Are these the stocks that one should look at right now because they are not even high priced, and it could add a lot to the portfolio of investors, new investors especially?
Well, I have been, a fan of NTPC for a very long time, and I have been recommending NTPC. I think last 2 years almost, and I continue to remain bullish on NTPC. So, as far as NTPC is concerned, definitely yes. If you have a time horizon of 1 year plus, please go ahead and buy NTPC. That's what have been my recommendation. Look, I think NTPC has transformed itself from a pure play thermal company into a thermal as well as green energy company, and that transition has worked out very well. There is huge amount of demand, incremental demand for power, and NTPC being the largest and the most established thermal power company has very well harnessed this incremental demand and progressed their own business, both on the thermal side as well as the green energy side. At some point of time, value unlocking also can happen by separate listing of the green energy business or some such other structure. So NTPC, definitely yes. I'm not very confident about IRFC at current valuation. It has moved up very fast. I'm not saying fundamentally the business is wrong. With the way kind of expansion of railways is happening, financing will be required and they will have great opportunities over the next 2 to 5 years. But the valuation looks a bit stretched and I will not recommend buying at current level. As far as ONGC is concerned, the challenge has been lack of discovery, lack of new resources for a very long time. I think that's unfortunate because that's the premier exploration company as far as India is concerned, and we'll hope that gets corrected. It was languishing at a very low valuation and it has moved up from those levels. But should I recommend a buy when the market is on fire? I will not probably. I will say let's wait and watch. There are better stocks to buy at current level. So ONGC also I'll give a pass.
All right, and talking about better stocks to buy, I think Reliance Industry, now that is a giant that has woken up this year. The stock has given phenomenal returns in 2024. In the last 13-14 sessions, it has risen about 7% or so. What's your view on that particular counter? Is this the kind of breakout that we were hoping for?
Absolutely. I think this was on the cards for a very long time. I think Reliance was languishing. If you go back, I think June 22, post June 22, Reliance was just hanging around there without doing anything, whereas the entire market was on fire. So it had to happen. And remember, inside Reliance, there are 4 companies actually. The traditional oil and gas business, which includes the petchem pit. Then we have the telecom. Then we have the retail and the green energy business. So I think as far as retail and telecom is concerned, these are well-developed businesses generating revenues, profits, and EBITDA and expanding continuously. And they're the largest player in the respective spaces. Green energy, there is huge commitment for investment, and that's pretty much happening as we speak. Oil and natural gas, I think there also a lot of activity, but it's a mature business. Petchem has been under pressure for some time. GRMs, keeps moving up and down, so there are volatility in that business inherently, but it's immensely profitable overall. So I think sum of parts is significantly higher than what it was quoting at. So we will not be surprised if it moves up to 3,300 to 3,500 levels in the near future.
All right, another 220 point up move could be seen on Reliance Industries. That's a view coming in from Mr. Bandyopadhyay. Sir, always a pleasure speaking to you. Thank you for joining us here on News 9. But before we wrap things up, let's look at how the markets are doing. And, we are still trading below that 22,100 mark. Nifty as of 10:10 a.m. this morning was down about 0.07% at 22,081 levels. So we are seeing quite a bit of resistance build up at that 22,100 mark. We are just about 19 points shy of it. Sensex is also trading with a cut of about 0.04%, but it's sitting just below the 73,300 mark. And the mid cap index, that continues to move higher. Remember, this is the first trading session when the index has moved past 48,000 levels, and we are currently near the day's high on the mid cap index. That is up about 0.4% at 48,027 mark, and the small cap index is also inching higher. That is up about 0.21% and making a way towards the all-time high, just about 40 points shy of it. Volatility continues to be a problem, but this is in a market that is at an all-time high. India VIX as of 10:10 a.m. this morning was up 1.45%, just shy of that 14 sort of levels. But with that, it's a wrap on this edition of First Take, but stay tuned with us as we'll be back with Business Plus.
Ram's Ayodhya rebuilt. Ram Lala's Pran Pratishtha. Countdown to January 22nd.